Good afternoon, everyone. Welcome to the mathematical literacy class for today. My name is Duduzile Bopega. On the very first page, I have, okay, let me go back to the page. This is my, should you have any questions regarding the lesson, today's lesson, or any mathematical literacy related question, you can contact me on that email address, and I will respond to your questions. And then today, as I mentioned yesterday, we'll be doing types of bank accounts and services. We'll be covering bank statements and we'll be calculating bank fees. So yesterday we worked on the budget, right? We did the budget and the income and expense statement. So it's taking over from there. With the knowledge you have learned about income and expenses, we move on now to the banking system. Okay, banks offer different types of accounts and services. We've got the different types of accounts and services listed on the page. First up, it's the savings account. This is a bank account that earns interest, and you can use a savings account for short-term savings. So this is where you put your savings, as it's explaining. Second part is the check or current account. Those two terms can be used interchangeably. A bank account that is used to deposit and withdraw money by visiting the bank branch, or you use an ATM or internet banking or writing a check. These days you can even withdraw from the till at the shop. You see, a lot of options are available these days, and they are usually available to people who earn a regular income. So they depend with the banks and the services they offer. Then we've got a fixed deposit account. This one is aimed at those who have a lump sum they want to invest over a fixed period of time. It can be for medium or long-term savings. Interest is also earned on the investment. So with this one, if you need to withdraw money from this account, you'd probably serve a 32-day notice before you are able to access the money. If you want it immediately, then there's a fee you'd be charged, which they'll deduct from the money. Credit account, this one is when they have a credit card, an account either with a store or a bank that allows the account holder to purchase items now and pay for them later. So with this one, as it's explaining, you're buying on credit. You're buying with money you might not have yet at that time, and then you pay it back later. So you can have those. You find them at a lot of stores, even, a lot of stores, even the grocery shopping stores now, they have these credit accounts. Then we've got the debit account. A debit account, debit cards can be used to pay for purchases. When it's swiped, money is deducted from the account. Credit is not available on this account. So with a debit card, you don't have credit. You won't be able to spend money you don't have yet in your account, and you can't pay it back later. With a debit card or debit account, you pay using the money you have at your disposal. Then bank statements. When bank statements are usually sent to the account holder monthly, and they show the following for each transaction. So this is a bank statement. Is probably you have a card, whichever card you have out of the ones we've listed just now, and you spend your money per month, or let's set a time frame of a month. All the money you are sending, or the money that is coming in your account or leaving your account, it will be recorded in your banking statement. So as we've set a time frame for a month, at the beginning of the month and throughout the month, you spend money, you get money. Then at the end of the month, you would receive a bank statement, which will be a record of all your transactions for that month. So you'll see the date of the transaction. You'll see a description of the transaction, which will show you the type of transaction. Could either show you that this was a deposit, probably from the bank or whatever reference number it was used. You'll see the amount of the transaction, indicating whether it is a debit or a credit. And usually for debit and credits, they'd be listed in different columns. Then there'll be a column for the balance after each transaction. So it would be similar to the one we did with income and expenses statement. A bank statement is much similar to that. It will show you what was your income, it will show you which ones were your expenses. So that would be a clear, it's usually advisable you'd use your bank statement to work on your budget, because this one is a clear indication of the amount you've spent and the amount you've had coming into your account. Then the different terminologies you come across. There's an account holder. This is a person whose name the account is in. Opening and closing balance, the amount of money in the account at the beginning and the end of the period. So usually the most periods we'll use here, the one that would be recurring would be a month. So opening balance, this is the money you have beginning of April. And then closing balance, say we are working with April. This is a statement you receive in April. The opening balance for April 1 would be the closing balance for March 31. So what was the closing balance for March is the opening balance for the following month. That's how they work. And then transaction is any event where money moves into or out of an account. Debit transaction is amount of money paid out of an account. So this is money that is going out, or you'd probably say those are your expenses. Then credit transaction is amount of money deposited into an account, or money you have available in your account. And then example 1 would work on bank statements. On our right-hand corner, the top right-hand corner, you have the bank statement. Ola receives the following statement from her bank detailing her transactions from 21 January 2013 to 20 February 2013. Study the statement and answer the questions that follow. So we need to study the statement. You see the very transactions. On the first column is the date. Second column is the descriptions of those transactions, amount per transaction. And then with the two, we have two columns for amount. One would indicate the debit and the other one would indicate the credit transactions. Then on the very last column, it's the balance. If you recall from yesterday's work, when we did the income and expense statements, we had the last column was the total running costs that the person we're making an example with had. This is exactly like that. The same way we calculated the total running costs from the income and expenses is the same way we would calculate the balance in this case. So going on to question 1A, how can you tell the difference between the debits and the credits in this statement? We'll see two columns. Remember the amounts, two amounts here. One of them is the debits and one of them is the credits. But how do you see which one is the debits and which one is the credits? Remembering the definition of credit and debit in this context, credits are positive values and are in the left-hand column. These ones, they are in the left-hand column, they are positive values to indicate that that is income, money going into the account. And then the debits are the negative numbers and are in the right-hand column. So for this statement, it is indicated in negative to show you that it's money going out. So it is money that will eventually be subtracted from the overall balance of the account. So beginning here, then we list Xola's debits and credits for the month to show that you understand which one is credit and which one is debit. Money that came into Xola's account is the salary, which is 8,000 rands on the 25th of January. And then there's money again, 500 rands, which came in on the 14th of February, which was payment from Mrs. S. Kumalu. Those two are the credits in this account. That means that is the money that came into the account, income in the context that you understand. And then the debits is everything else on the second column, which is the car insurance, the electric transfer for the rent. So the rent, we've got the medical aid, we've got the cell phone contract, and then we've got the closing store account, we've got groceries, and we've got car repairs. Car repairs is the auto mechanics. Auto mechanics means that that is the name of the company where they went for car repairs. You see, and then purchase at Shop and Save. Shop and Save is the name of a shop where they did the groceries. Super Fashion Store is where they have a clothing store account. You can see, you can deduce that information from the names found in the description here. So those ones are the debits, the ones indicated with the negatives on the second column of the amounts. Third question C. In the first line of this statement, Kola receives a salary of 8,000 rands. Look at the balance and work out what she had in the account before the payment was made. What they're saying here is when we look at the very first transaction from the 25th there, Kola receives 8,000 rands. Ne? But let's look at the balance. The balance is 8,000 rands, 8,050 rands and 50 cents. 8,050 rands and 50 cents. That is the amount he has in the balance beginning of this statement, 25 January 2013, which is the timeline, which is the time frame we are given to work with this statement. So on the 25th, he received 8,000 rands, but in his balance, he has 8,050 rands, 50 cents. What does this mean? It means before he received the 8,000 rands, he already had 50 rands, 50 cents in his account. So that means before the 25th, he only had 50 rands, 50 cents in his account. How do you work this out? Basic additions and calculation and subtractions. In this case, we are subtracting. The balance subtracts the amount there, which is subtract the credit of 8,000 rands. So it's 8,050 rands, 50 cents minus 8,000 rands. Answer is 50 rands, 50 cents. That is how you work this out for the very first answer. That's how you find it. With the balance to work out the balance, as we mentioned, you would add all your credits and you subtract the debits. So you add all the incomes and you subtract all the expenses. So for this very first case, depending on the date, so you'll work according to the date. If we are requested to work out a balance for the 3rd of February, then you go for the balance of the 2nd of February, subtracting the expense that happened on the 3rd. And if there was an income, you would add the income which was received on the 3rd. So you will always work with the 2 days. It will always be the last date, which was the closing balance, and then the opening date, which would be the opening balance for the new date. So like I said, suppose we want the balance for 03/02/2013. We will see that the opening balance for that day, the closing balance for the previous day was 4,250. Then you would subtract the 300 and the closing balance for that day would be 3,950. That is an example of how you'd calculate it. And then D, Kola receives some birthday money as well as her salary this month. Identify and write down the birthday transaction. So in this statement, we were told Kola had received the salary and he's also received birthday money. So it's the two options. We already know that for salary, he received 8,000 rands. So that makes it obvious that this 500 rands then must have been for the birthday transaction. So here we found out, firstly, that it means Kola's birthday is on the 14th of February, and the birthday present came from Mrs. S. Kumalo, who sent him 500 rands. Why was this easy? Because we already only had two options. There was no other option for income. We only had the 8,000 rands and we have the 500 rands. And we know for a fact that the 8,000 rand is the salary because it's indicated there. But the description for this birthday transaction is not very clear, and it doesn't tell you or give you the information that this is actually a birthday present. It only tells you that this is payment from Mrs. S. Kumalo. But the question here is telling us that this is a birthday transaction, and that's how we know then that this 500 rand is the birthday transaction. Next question. how much money would she have been left with on 20 February 2013 if she hadn't received money for her birthday? So if she hadn't received money for her birthday, that means right now in all our calculations, we exclude the 500 rands that he received for his birthday, because they're saying how much would he have left on the 20th if he had not received, or it says she, I'm sorry, if she had not received money for her birthday. So if Kola had not received money for her birthday, how much would she have left at the end of the statement, which is the 20th? So from the balance there, the closing balance, the 1,400 rands and 50 cents, we subtract that 500 rands. Then we see that had she not received the 500 rands birthday transaction, she would have been left with 900 rands and 50 cents. So this is how it works with the accounts and the balances. It's just basic subtractions and additions. It should be easy to navigate and move around. Then F, Paula wants to save 15% of her remaining money this month. How much can she save? So which one is the remaining money? The remaining money is 1,400 rands and 50 cents. So she wants to save 15% of this 1,450. What we need to do now is do what? We need to calculate 15% of 1,450 cents. How do we calculate 15% of that? 15% of 1,450 would be 1,450 multiplied by 0.15, or in your calculator you can put in 1,400 multiplied by 15 over 100. 15 over 100 would be 0.15. Then your answer is 210 rands and 8 cents. So 15% of 1,400 rands and 50 cents is 210 rands and 8 cents. That's how much she would be saving for this time frame. 210 rands and 8 cents. I hope everything is clear so far. Any questions? Kobe, I don't see the Q&A.
No questions at this stage, teacher.
Okay. All right, then I'm moving to the next question. Now we're working on banking fees. We already have we've worked on the bank statement, right? The banking fees also is quite similar to that. Now we're calculating, banking fees is when we're calculating the bank charges for the services. So this is how much the bank would charge you for every transaction. Examples here would be, you see on the right hand corner, it gives you a detail. This is the basic structure they have. This is it shows you, it's a guideline to show you that if you look at the top there, these are the transactions on the left and the fee on the right. So monthly maintenance fee. So that's an amount you would pay monthly, regardless of whether you use the account or not. That you would pay 5 rands every month for this account. Then for deposits, if you deposit cash over the counter or at an Igoli Bank ATM, you'd pay 5 rands. If you deposit a check over the counter or at the Igoli Bank ATM, it would be free. So these, it would tell you if probably you're paying by card at a till point, the fee would be probably 5 rands. These are examples. So when you look, it's something you need to apply even in your own personal lives. Suppose, I don't know if you all have bank accounts, but say you have a bank account. For those who have bank accounts, you look at the bank you're banking with, and that's what usually the fees, these fees are what guides people when they choose the banks that they use. So you'd find that they'd say most people are using Capitec because it charges fees which are cheaper, as opposed to, probably example is other banks, maybe Standard Bank or FNB. This is just an example, it's not fixed in stone. So what do they mean by that? Probably when you withdraw at an ATM using this one bank, you'd only pay 2 rands. But when you withdraw at an ATM using the other bank, you withdraw. So let's say, example, we have bank A and bank B. When you withdraw over the till with bank A, you pay 2 rands. But when you withdraw over the till with bank B, you'd pay 5 rands. If you transfer to another bank using bank A, you'd pay 10 rands. But if you transfer over, with the other bank, with bank B, you'd pay 50 rands. So those are the fees. That's why you need to be mindful as you are planning with how you will spend your money that month. Whenever you check the balance in this bank, whenever you check the balance, you are charged a fee for checking your balance. Whenever you withdraw money, you are charged a certain fee for withdrawing money. So what would be wise is you analyze your bank, you find out what the fees are, and then you plan properly. When you know that this month I'm going to need probably 200 rands cash, you withdraw the 200 rands at once to avoid getting more fees. So if you withdraw 100 rands today and 100 rands tomorrow, the fees are added onto each other. But if you just withdraw 200 rands today, you charged only one. If you're going to transfer to someone, you know that you're transferring to this person only once and you're not going to transfer again next week, just to avoid those unnecessary fees that you made incur. So now, first part is, this one is an Egoli Bank. That's the name of the bank, is Egoli Bank. So Arthur's Bank, Egoli Bank, lists the following banking fees. The banking fees are on your right, which are all listed there. And then the information is given. Arthur subscribes to self-service banking and pays a monthly maintenance fee. What this tells us is this monthly maintenance fee he pays every month. Whether or not there were transactions happening in his account, he would have to pay the 5 rands monthly maintenance fee. In the space of a month, Arthur performs the following transactions. Firstly, he deposits 335 rands in cash at an Egoli Bank ATM. He withdraws 500 rands cash at another bank's ATM. He withdraws 100 rands cash over the counter at an Egoli Bank branch. He inquires twice about his balance over the counter at an Egoli branch. He draws cash whilst buying groceries at a till point at his local supermarket. And he makes 3 electronic account payments to pay his rent, electricity, and phone bill. Question 1 is, calculate the total bank charges for these transactions. So we've deduced what we explained just now. Each transaction is charged a certain fee or a certain bank charge. So now we have listed a lot of the transactions he did over the month. We need to look at what each transaction, what the bank fee is for each transaction. The first one we are told there is that he pays a monthly maintenance fee. So we go look, monthly maintenance fee is 5 rands. So there'd be 5 rands monthly maintenance fee. That's the first one, 5 rands. Plus, what's the next one he does? There's the self-service banking. Why are we choosing self-service banking? We are told that Arthur subscribes to self-service banking. And when we look on our right, we can see that there's a fee charged for self-service banking, which is 15 rands. Plus, this one, he deposits 335 rands cash in the bank, the Egoli Bank ATM. So when we look at our information there, we find that whenever there is a transaction here, cash deposit at Egoli Bank, which costs 5 rands. This is cash. We find this information under deposits. Whenever there's a cash deposit over the counter or at an Egoli Bank ATM, there's a fee of 5 rands. That explains the 5 rands here for that deposit of 335. So what we write here, we write the fee, not the amount he deposited, but the bank fee or the bank charge for that particular transaction. Then next one is 7 rands for cash withdrawal at other banks. Look at your information again. Cash withdrawals. We go see that cash withdrawal at another bank's ATM is 7 rands. That's why we write our 7 rands there. The next part is there's 10 rands which is charged for cash withdrawal over the counter. Over the counter cash withdrawals fee is 10 rands. That's why we have the 10 rands there. Which withdrawal are we talking about? We're talking about that withdrawal which was the 100 rands cash withdrawal. Then there's 0 rands for the first balance enquiry. He inquired about his balance twice over the counter. So when we look at the information here, the balance enquiry, the very first one is free. The electronic about this one, electronic account payment, and those information about the balance. The very first one is free. So the first balance enquiry is free. Then the next one, the next balance enquiry would be 10 rands for the next balance enquiry. We see that information again there. The balance enquiry is the very last one. We are told that the first free per month, and then it's 10 rands. So he only gets one free balance enquiry per month. And then after that, it would be charged 10 rands. That's why for the first one, it's 0 rands. And for the second enquiry, it's 10 rands. And then the third one is the 2 rands fee for the cash withdrawal he did whilst buying groceries. Again, this information is available on our right. So charge him 2 rands. Plus 3 multiplied by 0 rands. Why? It means they do not charge for electronic account payments. So electronic account payments are free, and that's why even though he did 3 of those, it won't charge him anything. 3 multiplied by 0 would be 0, so it won't cost him anything because it is free. So that's how we work this out. Then our total is 54 rands. So this month, he had spent a total of 54 rands on bank charges. So again, when you work out your balance, when you work out your budget for the month, you need to also put in mind the balance, the bank charges that would be charged on your account. So suppose your income is 500 rands. Your balance, it's somewhere in your balance, you should make leeway for the bank charges that would be charged on your account. Because as you can see, this month he had an overall 54 rands that only went to the bank charges. And this is how banks are making most of their money. So you can imagine if he had been withdrawing a lot of times or sending money over, withdrawing at other banks, sending money to other banks, how much charges is deducted from his account. That is a lot of money. So to work this out, please be careful with banking fees. Make sure you first work out the categories. So here, for the very first one, he deposits 335 rands at an Equally Bank ATM. You know this is a deposit at an Equally Bank. So that's where that will help you find the information. Then the other one would probably be a deposit at another bank, and that's how you find the information on this column here. So do not be confused by the amounts he is depositing and receiving in his account. Focus on the category of the transaction, then find that information on this information of the bank charges. And then next question is, Arthur has a balance of 650 rands in his bank account at the end of the month. A. Calculate the ratio of the total bank fees to the month-end balance. So we are told here, he has a total of 650 rands in his bank account at the end of the month. We are now doing a ratio of the total bank fees to the month-end balance. So ratio, the first information here we are told is total bank fees to the month-end balance. That's why here you'd have banking fees to the closing balance. So it would be the 54 rands to the 650. It is very important that you write it in the order you are given them in. So you are first told about bank fees to month-end balance. So on your left, it's the bank fees, and then on your right, it's the closing balance. So please do not mix them around because you would lose a mark for that. So you can't now, because the statement is very clear, total bank fees to month-end balance. You can't then be writing the month-end balance to banking fees. You need to follow the order they give you the information in. So in this case, it would be 54 is to 650. So the 54 is the banking fees we have just calculated in question 1, and 650 is the balance he has in his account at the end of the month. Then the all here, which is 27, is to 325. This is the simplified values now, where I said 54 divided by 2, you got 27, 650 divided by 2, you got 325. You make sure when you simplify, you divide by the same value. So the common multiple between them, the lowest common multiple between the two, you divide by that. In this case, it was 2. That's why now we have our answer in simplified form. So it wouldn't matter which one you write in this case. But first start with the 54 is to 650, and then move on to 27 is to 325. So you first write the values as they're given to you, then you move on to simplify. But this question here was not interested in you simplifying, so you can even leave it here. Ne? But if they say simplify, first write the ones given, then move on to writing the simplified value. And question B, express this ratio as percentage, meaning then you round off your answer to 1 decimal place. So the ratio we're given here is 54 is to 650. We express this as a percentage. So you're going to say 54 divided by 650. Then that fraction multiplied by 100 is equal to 8.3%. So you will eventually get the same answer if you use the values we are given or you use the values that are simplified. At the end of the day, they mean the same thing and you will get the same percentage because it's just simplified. When it's simplified, it means we just simplified the values and we didn't really change anything. We just made it simpler. So it's like saying 4 over 4 or saying 1. That is simplified. 4 over 4 multiplied by 100 is 100%. 1 over 1 multiplied by 100 is equals to 100%. It's still the same. So when you work with fractions, that's what we're doing. We are just finding a simplified value. That's why your answer would be the same. So like I said, either one calculation would be correct because eventually you'd get your correct answer. And then they are strict here. You must round up to 1 decimal place. So pay attention to your decimals and round off accordingly. Question 3, suggest ways in which Arthur could reduce his banking fees. So we know Arthur had banking fees of 54 rands. What can he do to reduce his banking fees? Arthur could withdraw cash at Egoli Bank ATMs only. Why? We've seen that in the information here. If he withdraws at other banks, it charges him more money when he withdraws at other banks. They are more costly. Like again, we refer to your own personal lives. If you already have a bank account, you would know that if you withdraw from your own bank's ATM, you'll be able to withdraw at less charges, as opposed to when probably you are at a mall and the line for your bank is full or that ATM is not working and you are forced to withdraw money at another ATM. The charges at another bank are more. So yes, you would be able to withdraw at different banks than the one you use, but the charges are way more. That is why you would find people in one line of an ATM at a very, very long line standing there because they are avoiding the extra charges they would incur if they go withdraw at other banks that they are not banking with. So that's the reason. And you might want to take note of that. So if there are many banks, always try and withdraw at your own bank because the fees there are way cheaper than if you use other banks. Also, in this case for eGoli Bank, we found that eGoli Bank charges more even when you withdraw over the counter at a bank branch. Why? They're avoiding people. You see in this day and age, lately now, when you go to a bank and you want to withdraw, they'll just show you the ATM machine and help you use that machine if you can't use it. Or they'll show you the computer there so you do your own computer banking or your online banking. That's what they do now. We are moving more towards the digital age. So if you still insist on going to the bank to do transactions that are possible to be done online or even at the ATM, you'd be charged extra fees for that. A lot of services are doing that, even maybe travel agencies that have websites. If it's possible that you do your own travel arrangements online, you do it at a less fee. But if you want to call in and you want the agent there to help you step by step, they will charge you an extra fee on your transactions. So take note of those things. We are now moving into a digital age, and they are trying to enforce that probably in simple ways like this. In the bank charges, they would cost you in a lot of ways. So be wary of those things as you do your transactions and as you use your money, as you spend your money. Another option here is he could ask for a balance enquiry from an eGoli ATM instead of asking for an inquiry over the counter like you did right now, or via self-service banking instead of over the counter. So the cheaper options would be getting the bank balance inquiry at the ATM or the self-service banking instead of over the counter. This is what I said again. These days, there's cell phone banking, there's internet banking, there's all these things where you can do your banking remotely wherever you are, and you don't necessarily need to be at the bank. So when you can do it on your phone, do it on your phone. If you can do it over the internet at home, do it there instead of going to the bank, because there it's either they won't help you anymore and they'll just direct you to the computer or direct you to the ATM, or if they do help you, they'll charge you extra costs for using over-the-counter services. And then you could also withdraw cash only at a till point without purchasing anything. So at a till point, let me go back to that slide. At a till point, when you withdraw money at a till point, cash only, it charges him R1. But if he withdraws money at a till point, when he withdraws cash along with the purchase, so suppose he's buying groceries, and then whilst paying for the groceries, he's withdrawing cash, that charges him R2. So to reduce his banking fees, he'd make sure that next time he only withdraws cash, then probably after withdrawing cash, he will pay with that cash for the purchase instead of doing both of them at the same time because the fees are more. So we might take this lightly, guys, because you probably think 54 rands is little. But you'd find that people usually spend quite a lot of money on banking fees, close to 200 rands or 300 or 500 rands on just banking fees. And that usually happens if you do not monitor your own transactions per month. And if you monitor them, it helps you keep track of where your money is going and how you are spending your money. Can you imagine what he could have done with an extra 54 rands, or what you could do with an extra 200 rands that usually goes over to bank charges? So plan your money properly. Like now, he should try to reduce his banking fees. So your homework today, there's a worksheet that would be available online. I've submitted all worksheets for this week and the previous week's work. You'll find all of those worksheets. But besides, over and above that homework of the worksheet, I need you to personally monitor your money. So probably just go look at your bank statement from the previous month. Ne? Monitor your bank statement from the previous month. See what you spent your money on and calculate your bank charges. You'll notice that every month your bank charges differ because you don't make the same transactions monthly. Now, especially for you, because you are still in school and most of you are not even working, so it's not even your money that you are spending, you might take this lightly. but try do it so that if you're able to manage that little money you have now, the day you are able, probably if it's, in fact, this is your last year in school, so next year you'll be going to varsity, others would be working, you know, you'd be living different lives from the one you are living this year. It will help you manage your money better, manage all your finances better, and it will also help you save. Imagine if your parents probably give you 500 rand and then you monitor your banking fees and all the other transactions you do, you'll be able to save an extra money on the side when you monitor your money properly. So that still give you the same amount, but you'd probably be left with much more than you were usually left with, because now you'd be wiser with how you spend your money and you'd be more wary of the bank charges and how you are using your money or where you are withdrawing your money. Yeah? So in the follow, that is it for today. Again, I will show you my email address so that if you have any questions, you contact me there. But from tomorrow until the rest of the week, we'll be covering cost price, we'll be doing selling price, and we'll also work out the break-even analysis. So I'll try work out some examples on those different ones, especially the break-even analysis, because a lot of you had been asking about it. So we'll work on that this week. Ne? Then the worksheets are also available on the website, like I've mentioned. If you encounter any problems with the worksheet, please email me again and we'll work through it together. When you are done working on those worksheets, send the answers to me so I can monitor your progress and see how well you are coming along. And if you're struggling, we will work together on that again. These are the sources, the links I've used, and I found them very helpful in working with this, especially the Mind the Gap study guide. It is very helpful. With regards to the textbook, whatever textbook your school has prescribed for you, continue using that one. This one was the one at my disposal. But the Mind the Gap study guide, you'll find it online, as well as the Siyavula mathematical literacy textbook. They are available online and they can help you. The Mind the Gap study guide, especially for the grade 12s, has a lot of activities there, and even the memorandums, which is the answers to the very many questions you find. So it will help you get used to the questions and answering. And if you get stuck, you are able to access the memorandum there. Then these are the links and hashtags that for more information, whether the worksheets and all the other information is posted, is on www.africateengigs.co.za. Get more information there, africateengigs.co.za. I wanna go back to the slide with my email address for those that didn't get it, so you can contact me. This is the information there. If there are no questions, I'm gonna go now. Thank you so much for today. Hi, Kobe, I'm done.